I'd like to offer you 5 reasons why you should consider investing with us in the global financial sector today. Firstly, financials are simply too large to ignore. They're the second largest sector in global equities, making up over 16% of the market, but most allocators are still underweight in their positioning. Interest levels in the sector have picked up in recent months, but we think the consensual underweight positioning poses a real risk to client portfolios, and we think that financials are a great way to diversify them. Secondly, financials are more varied than many realize. Our conversations with clients often focus on banks, and whilst they're clearly important, they represent 40% of our portfolio. We also have significant investments across a range of exciting subsectors like insurance, diversified financials, asset managers, data providers, exchanges, and payment businesses. As active stock pickers, the diversity of opportunity set allows us to allocate capital where we see the most attractive returns. Thirdly, the sector is already outperforming due to improved fundamentals. The operating environment for financials has improved considerably, with higher interest rates providing a considerable tailwind. Returns on equity are much higher than they have been in past years, and capital positions are strong and resilient. This is allowing many companies to pay attractive dividends, which we see as a sign of real confidence for investors. It's perhaps no surprise, then, that the financial sector has performed strongly in recent years. In fact, financials have outperformed the wider market in 3 of the last 4 years, and we think that this is set to continue. Fourthly, regulation is turning from a headwind to a potential tailwind. Since 2008, the financial industry has faced consistently stricter capital requirements. However, we believe that we've now reached the point of peak regulation. In fact, there are clear signs of deregulatory momentum, particularly in the US, where the new administration is simplifying large parts of financial oversight. Regulation remains very important, but this shift in mindset is a significant positive. It could also lead to increased M&A activity, which would be a positive catalyst. Fifth, valuations remain attractive. Despite strong performance, financials are still very attractively valued. The sector trades on 13-times forward earnings, which means that investors pay £13 for every £1 of expected profit. This compares to a relatively more expensive global equity market on 18 times and the S&P 500 on 22 times. In summary, we think that financials offer clients a way to diversify their more growth-oriented investments in a sector that's seeing significantly better fundamentals and remains attractively valued.